Good morning, good afternoon, good evening, good night, wherever you're tuned in from. Let me know if the mic, video, everything's working. It's a beautiful day. It is February 21st, 2003. Man, we are moving through this time this year, aren't we? I mean, after last year's, absolute nonstop downtrend of price action, it's nice to have had such an incredible January. And now in February, looks like we're kind of consolidating around these levels. We're being held below $25,000. Let me know if everything's good in chat. Shout out to everybody here. Welcome to the BitLab Academy daily live stream every day, 10:30 a.m. Eastern Standard Time, Monday, Tuesday, Wednesday, Thursday, Friday. When I get back to New York next week, or actually Friday, next week onward, while I'm not having to film all day long for all these new lessons that we're building for BitLab Academy, then I'll have some more time to do some more content on the channel. So we will, of course, continue this morning show, but I will also be trying to put in some regular sort of daily alpha, sort of evergreen content, specific training sessions on different topics. A little bit of a taste of what's in BitLab Academy, but I got to tell you, I'm so excited about what's coming to BitLab Academy here in the next it's just around the corner. We're running as fast as we can, recording all this content, and we've got our editors. We got 2 or 3 editors that are working nonstop, editing all this stuff and building the quizzes and building. The new BitLab Academy structure is just incredible. It's far and away blows out what we currently have in there. So that being said, if you haven't yet, go check out bitlabacademy.com. Right down there at the bottom is the link, bitlabacademy.com. Sign up for the newsletter there. Make sure you're following all the correct socials, which are also there next to the arrow. And my name, for all of you that are new here, if you don't know who I am, my name's Kelly Kellam. Welcome to the BitLab Academy Daily Show here, part of Hit Network. Please hit that like button, hit that subscribe button, ding that bell. It really is the easiest way that you can contribute for all the effort that goes in on our side, putting these things together. Filming it, the studio, the cameras, the streaming, the time. You all do not understand how much time. It's not just turning a camera on and starting to stream. It's a lot of preparation. So hitting that like button really does help out, and I appreciate it greatly. So I'm going to take a second. I'm going to read through the chat just for a second, say what's up to everybody. Karen Swigart Harris was the first one in the room. Shout out to you. Got Carlos Ruiz, Alex Green. I told you I'm gonna hit you back on Discord about some things you and I are gonna be doing together. Got DJ Lavish. For all of you that don't know, I did travel nationally for many years as a singer-songwriter, and then I played all over New York, and then all over the states as a DJ, and then went international, I played all over the world. That was a whole nother life for me, though. I'm not gonna. You guys can find my DJ stuff if you want to find it on SoundCloud. It might have something to do with my name, but this is all about crypto, all about navigating this market, bridging that gap from beginner to pro, helping people understand, not just somebody talking at you, not somebody just talking the technical analysis at you that sounds like another language. It's really trying to break those things down into doing the technical analysis and doing on-chain analysis and talking about what's happening in the news, but relating it back to how and why it is impacting what's happening, or can impact what's happening in the crypto market. So continuing on to more shout outs here. Got King Peasant, Matt C, my boy. Hope your wife's feeling better. Crimson Caravan Company, Alexandra G. Let's see. Where's our boy Pete? I don't know. Inso Mining. We got a lot of people in here. We got a lot of regulars. A shout out to everybody that's been here from the start. I appreciate you. Let's go ahead and move on in to what's happening, what we're going to be talking about today. First off, make sure you're following BitLab Academy, which is at Academy BitLab on Twitter. And then, of course, come down another great way to help is when you see us go live, you can share it straight from YouTube, or you can come over to the BitLab Academy and retweet this. Let people know about what's going on, because the whole point with this channel is not for me to talk at you. It's to help strengthen the space. Think about that. I'm trying to bring understandable knowledge of the market and how to navigate it, and strategies and plans to the average crypto investor, as well as the people that are already further along in their journey. Whether you're a beginner or you're a pro, I guarantee you're going to learn something here on this channel. And the more people find out about this channel, the more people come and tune in, the better people will navigate this market, the healthier the market will become. So by sharing these things, by hitting that like button, by retweeting these tweets when we're going live, all this helps strengthen the entire crypto community, because that's what this is about. It's about making sure all of you, me included, everybody in the chat, and everybody that's going to come in here later, making sure that they can navigate this in a healthy way and profitably over time. Because if it's such a revolution, don't we want a rising tide to raise all ships? Well, that's what this is about. So we're going to come over here. I'm going to come to my profile. Make sure you're following me at Kelly Kellam. And what we're going to talk about today is on the markets. Got too big of a screen there. On the markets, we see that we keep fighting into this range right here, up at the $25,000, $25,200 level. We've hit this a number of times right in this region. I'm going to come. That's on the. Why is that on the 3 minute? I don't ever look at the 3 minute. That must have been an error. I was like, that's a lot of movement. That's because it was on the 3 minute chart. So zooming out on this, we could see we're just fighting. We're fighting right here in this region. Boom, 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 boom. Now, this was from a newsletter that I put out. I like to send out some signals and what I'm seeing. But we have this bull flag here. And of course, we always have to remember, we're going to have a macro pattern, a midterm pattern, and probably many micro patterns. So as we can see here, we had this breakdown, this capitulation from FTX, sideways accumulation. The bulls started coming back in. We finally got under the long-term hold or realized price. We finally, got into that sort of clear accumulation zone for smart money, and this is when money started pouring into the market. And then we see this sort of launch off because we had this bullish divergence over many months, many weeks, if not a couple of months, loading into this position here. So it's always good to look at that macro so you understand where we're going. I don't know why it's still on the 2 hour. There we go. So we are fighting this zone right here, and we look like we're in a bit of a bull flag or a bull pennant, both with same sort of determination and how they break out. But what I'm really looking at here is this level and these two arrows. And I put this out in a newsletter yesterday. If you are not yet, make sure you go over to bitlabacademy.com. Sign up for this newsletter on the pop-up, which you just put your email right here. That's all you need to do. And once you put your email here, you get entered to win a free month access to the courses and the indicators that I use, the BitLab indicators that I developed along with Frankie Candles and another individual that is a major player or was a major player in the high frequency trading, multi-$100 million a day. So we pulled all of our thoughts and knowledge about crypto and technical analysis and charting and figured out exactly what would give us the best signals, and that's how we built those BitLab indicators. So sign up here. You'll get access to not only the newsletter each week, sometimes 2 in a week, but also you get entered to win these basically the free month access. And in addition to that, you get a chance to vote on some of the content that happens here on the daily live stream and some of the content that's in the newsletter. So shout out there. And we're going to be covering, we're going to be going over Cardano a little bit today, because that was the most voted on altcoin out of the 14 or something that I posted in there. So what we're looking at here, and we're going to be talking about a variety of things today. We're going to be talking about the news a little bit about, because we've been mentioning on this channel about this Chinese 10-year and the liquidity that comes from China. And then we get this bombshell yesterday. We're going to go over that in a second, but this bombshell from China about potentially allowing crypto investments again and holding and buying and trading, which could mean a huge amount of liquidity coming into crypto. So what we want to see here on Bitcoin, I'm looking here at the 8 hour, is we have this zone right here that is, see this square box that I've got right here, this highlighted region. We've got 1, 2, 3 taps into this, as well as basically hitting this level that is the high from right before the FTX crash. This is, I guess wouldn't say right before, but August of 2022. This is a high here, which is right at $25,230. And we keep fighting this region. But what we're seeing is a rejection off the region with a decent sort of pullback from the bears. But then as we push up, we're getting weaker and weaker pullback from the bears, but still reaching roughly the same price regions with the bulls. So this could very well indicate that we are going to have this target that we could take from the bottom of this flag. If we think of this as a flagpole, where we have the flag and the pole, then you take this flag here and you just take it to about where you're going to break out, and then we can see what the target is on this. And this would be, the target on this would be 29,580, which, man, that would feel good if that happened. Now that today is no longer a bank holiday, man, that was a long weekend, wasn't it? For the markets, CME futures, all that was not open yesterday because it was President's Day here in the U.S. So the markets are going to have a bit more institutional money playing today. And so now it would be healthier if the market does push up to this, to any of these upward targets, breaking out of this, because had it broken out yesterday or Sunday or Saturday, then we would have a gap from that point that it broke out to where the CME futures closed on Friday, giving a lot of bearish pressure to come down and fill that gap. But we did not get that. The price has been consolidating right here inside of this this sort of ascending triangle. It's almost it's basically as close to an ascending triangle as we can get. We almost have a flat bottom here. There's a little bit of an angle on it, but we're getting some compression in here. And what I think is likely to happen, and I talked about this yesterday, what I think is likely to happen is that Bitcoin price will, the market will fake out as many people as possible by coming into this, basically breaking out of this to the downside first, and then coming back up and rocketing to the upside, or the opposite fake out, coming back up, breaking down, and looping back around like this, because the market is acting so irrationally right now, and Bitcoin and crypto has a history of sort of breaking the status quo for what particular patterns do, where they will eventually end up breaking out in the direction that pattern is meant to in terms of the statistical probabilities. However, because market makers and smart money and institutions, they have a good idea that there's a lot of newer traders in this market, and there's a lot less liquidity in this market. Therefore, they can move this around. They can trap people going to the upside and then bring it back down, and it's FUD them out and get them scared, so they sell, and then they get this lower price, and then it rockets back to the upside. So they're taking advantage of people in both directions. So right now, as much as you may want to, I want to sort of emphasize right now is not the time that you should be leverage trading, because although we have sort of defined, I'm going to double click on this just so we see just the charts. Although we have defined a low and then a higher low and now a higher high, by technical definition, we have started an uptrend, and on this midterm time frame, this daily 12-hour, 8-hour, this trend is an uptrend. However, because there's so much questionability on the market right now, I just want people to sort of be patient and conservative in their moves. I've been spot trading. You know how I had the $30,000 stolen from my Coinbase account? People were saying, well, I thought you say you're a pro. Why did you have that on exchange? Well, how the hell do you trade if it's not on exchange? It wasn't everything I had, thank God. I also got it back because there was illicit activity that was outside of my control, which is why Coinbase reimbursed me. So, but I did not have my entire portfolio there. I was trading, and I was trading spot. Why am I trading spot rather than I have skills in trading and I have skills in leverage trading, but right now in this sort of zone, and we're going to come back to this chart that we've gone to many times now, but this is the core sort of principle. Until we've really determined, and I want to break this higher high, and this higher high for us right now would be that 230. So I'm just calling it $25,300. Until we break that and really determine that we have a leg, a pullback, and a continuation, basically another leg, I'm being a bit more patient on getting involved with leverage trading because of what I just talked about, fake outs going both directions, and I don't want my liquidity and my capital to be eaten up by just trying to take very aggressive moves while the trend is just starting. More than anything, I want you to realize all the moves that you feel like you've missed, you will have an opportunity again. You might not get it at the same price, but I'd rather be conservative and be sure of my trade than just be jumping in and out of trades because the market's swinging back and forth in directions, and then you lose confidence, and then you just sort of go down that path, and I just don't think that part of it is worth it. But as it stands right now, we're kind of between these levels of 25,000 to 25,200, and this lower level, which is also this high here, and also the low right here, which is a 23,440. So about an $800 difference in where we're at, which is yeah, it's about I guess actually about a $1,500 difference. I don't know where that math came from, but yeah, about $1,600 difference. And we're in this range. Of course, we're in this flag right now, but we need to see a little bit of resolution here. And we're going to break down these charts again more in a second. But I just wanted to point out some of the things that I was looking at. But one of the things that we can do, and we haven't done this in a while, we are not a news channel, but sometimes we have to take news into account, and I like to use News Now. This is not any sort of promotion. This is just a site. It's a free site that I use that aggregates all the stories from all the, basically as many publications as you can think of: CoinDesk, Cointelegraph, Yahoo, Bitcoinist, Forbes, name it, Bloomberg. And it basically pulls all the news stories, and you can aggregate it into the top read, the latest, the top whatever. And one of the things that we need to talk about is the fact that more options. Let's reject all. I always reject all. What about you guys? Okay, so this is a major headline: Hong Kong outlining plans to let investors trade digital tokens. So of course we know we had massive FUD about 9 different times in different parts of the market cycle in the past, where China banned Bitcoin mining, and then they outlawed, basically trading it. And then you had, the stories have just gone back and forth, and then they're allowing it again. And then it seems like near the top of every cycle is when China plans to ban it, which has been interesting timing for the markets over the past, 6 or 7 years, as this has oscillated with China and Hong Kong. Now, of course, we've got a bunch of different headlines on this, and we don't need to necessarily dive into the stories too deeply because there's other news channels for that. But we can just read right here. Just yesterday, the Hong Kong Securities and Futures Commission released a statement outlining its plan to allow not only institutional investors, but also retail investors to trade cryptocurrencies such as Bitcoin and Ethereum. So this is major, because what this will do is this will allow basically a new on-ramp into the markets, into the volume that we can gain, the liquidity in the markets to support price action going higher. I very much doubt that the majority of people that come in on the retail side may be institutional, but even not that. I very much doubt that people coming in from Hong Kong and China are going to enter the market just to short. The majority of the people that come in will come in and have been waiting to take the advantage of the opportunity and the permission from their state government to allow them to buy and trade and hold Bitcoin and Ethereum and Cardano, whatever assets they're looking to trade. And so that liquidity is going to pour in the market. And what happens when you have, let's talk about this for a second. What happens when you have a particular supply of an asset and nothing changes, but you double the demand? Well, if you double the demand, then that effectively divides the availability of supply by half, right? If you double the demand, because now there's the same amount, but twice as many people that want it. But so we're not going. We don't have a clear picture yet as to what the inflow of liquidity is going to be from Hong Kong and China, but we do know that it is going to be another on-ramp coming into the markets. And so where we're at right now, that couldn't be a better timing. We've had our accumulation zone. We've had our identified double bottom here, Eve, sort of round bottom, as well as having that massive sort of bullish divergence that launched this, and then the liquidity coming in from the hodlers starting to acquire and retail and institutions. We get this spike to the upside, and now we're fighting at this region, wondering where the money's going to come from. Well, it's as if China answered our prayers and gave us a huge on-ramp for new money to have the availability to participate in these markets. So we can see that on the chart here. Now, going back into the where I had another story here. The next thing I wanted to just point everybody to is tomorrow we have not the FOMC, but we have the FOMC minutes, which I'm not really sure so much why. It's as if the Fed and the government are trying to shape a narrative and control what's happening in the market. When they have the way they organize how the FOMC meetings happen, which is a Federal Open Market Commission or committee, one of the two, determining what the Fed rate hikes are going to be, whether it's going to be a neutral, if you're going to increase hikes, if you're going to reduce hikes. And, they talk about inflation, what's going on with the economy. It's a pretty important meeting as it relates to monetary policy in the U.S. Now, within that, it seems to me like they very well could have had the meeting and then right afterwards share the meeting, talk about what the determination was, as well as sharing the meeting minutes right then. But what they do is they announce what the determination is for the interest rate hikes or reductions, if they're scaling back on hikes or whatever. And then they have a press conference, just talk about it, so you see the markets kind of jump all over the place. And then, a couple weeks later, then you get the FOMC meetings, which is basically the text, basically the notes of the bullet points of what was discussed in the meeting. So there's good speculation. There's always going to be speculation about, especially right now, I think tone is more important than ever. Understanding what was discussed and why it was discussed in terms of the potentiality of future interest rate hikes or a pause or a pivot. So tomorrow, and we can see this on this chart here, this is a Forex Factory calendar. There's many other economic calendars. I just have been using this for a few years. And you can scroll down here. You see the dates here on the left. And we go to tomorrow, we can see that right here. So 2 p.m. and 2:10 p.m. 2 p.m. we have the FOMC meeting minutes. So there's likely going to be a little bit of movement on tomorrow's chart, regardless of what happens today. There's likely going to be some movement on the chart, depending on what the tonality, meaning what message is being read through the verbiage of and the topics of what was discussed and how they were discussed, because it will have potential impact on. I don't think we have an FOMC meeting this month, but I think the next one is in March, so we're skipping a month. But this could have impact as to what the Fed decides to do in the next FOMC meeting, which would have a major impact on on the markets, determining what's going on with inflation, CPI, PMI, PME. There's so many different metrics that these economists and Fed board members discuss. So we just need to pay attention to that. But coming back over to you all really quick, if you haven't yet, hit that like button, hit that subscribe button, ding that bell. I appreciate you all here. And again, make sure you follow all the, go to bitlabacademy.com and check out all those socials there. If you're over there on Hit Network, shout out to you all. At some point, come over and check us out here in our chat. We got a great chat here with a lot of great people. So what's everybody doing right now? Are you feeling bullish? Let me know. Are you feeling like we are going to, with this bull flag that we have, do you feel like we are going to have a movement up? And if so, if we are bullish, where do you think price pauses at? Do you think we pause at this spider line right here at the 26,000? Do you think we make it all the way up to where this price action is here at the $28,500 level? Do you think we make it all the way up to 30K? What do you feel? If you're bullish, where do you think, not just the first candle stops, but where do you think we start getting on the chart when the price action pulls up? When do you think that sustained momentum starts to roll over and we get a bit of a cool off period? Do you think it's going to be up here at 28,000? Do you feel like it's going to be here at 26? Let me know your thoughts. I'm curious. And also you can comment below if you're watching this video later. I read all the comments. I'm always curious to hear where people think the market's going. It gives me a good indication. Also, some of the content I can do around that to either help teach a different technical analysis approach if you have a very skewed sort of look at things, or also just address some of those things if the majority, if people have sort of a confusion as to what's likely in terms of what's happening in the markets. Do you think, like, if you're not bullish, do you feel like we're going to go sideways? And if you're not thinking bullish or sideways, if we are going to drop, if you are bearish, are you smaller time frame bearish, as in terms of just a pullback to the $21,000 level, or how many people in here think that we are going to actually break down and get down below this level of resistance that we have flipped to support? Do you think we're going to break back below this? And we have a spider line and this resistance support line that we have here, this macro trend, which is this line right here. Let's go to auto. It's this is the trend line that we're looking at in question. Do you think that, because we do have this almost directly below us, and it's a confluent point, which is 20,225. And we have to remember, we still have to remember, we do have that CME gap that is down at about $19,900. And one of the things we can do, we can come over here on the daily, and I'm going to go to 4MA. We're going to go to the 4MA right here. We're going to be looking, I want to look at the 200. So the 200 moving average, which is this gray line right here, is at 19,761. But what is it that I'm noticing on here that is this is such a nice change of direction. Looking just at this gray line, look at how this is downward sloping, and we're getting not only a rounding bottom here on the 200-day moving average, but we're starting to angle it. Had a little bit of pullback here, but we are regaining that angle back to the upside, which is an incredible sort of thing to understand what's happening with the markets, to know that the 200-day moving average is starting to angle up. That means that we have had quite a movement, and we are sustaining it. We're sustaining that movement because this 200-day average, which is, if we're looking at the daily chart, which in this case we are, the 200 moving average is the average of 200 candlesticks, and each candlestick is representative of one day. So if this is 200 days average of price. This is what we're seeing. Now, of course, this red one, I believe, is 25. I hate the paintbrush. It never goes off the paintbrush. Okay. The 25, the red one is a 25, as we can see here. So this is much more responsive and kind of moves with the price. Now, remember, I don't want you to get confused. If you're ever using these moving averages and you're on the daily, but then you go down to, let's say, the 15-minute, go to auto. This gray line is no longer the 200-day moving average. This is still the 200 period moving average. So if you're looking at 15-minute candles, this is an average of the last 15-minute sessions. Each candle is 15 minutes. So it's an average of the last 200 candlesticks on the chart to give you that slower moving average. So when you are trying to look at the 200-day moving average, make sure you're looking at the daily chart. Just a little quick reminder there for everybody. Because we all do make errors sometimes, and we look at things thinking we're looking at one thing and we're looking at something else. So we need to do that. So I'm just going to take a second, check in with chat here. Big move up, and then we went down. So D Godfather, thank you for saying that. One of the things I have, he said, isn't this like 2019? And this is something I've pointed out. I've tweeted about it. I've drawn charts on it. I think I deleted, pretty sure I deleted the chart. I don't know where it's at on there, but we're going to zoom out here. We're going to look at the 3-day, and this is, I'm going to mute the 4MA, and we're going to zoom out on this. And what I'm seeing is most likely to happen, and we're going to delete the, how many times can you hit the wrong key? Okay. What I'm seeing is most likely to happen here. And what D Godfather is talking about is this right here. Boom. Now I'm going to show you one more thing. So this is, see this red line right here? This is the last Bitcoin halving. The time before that is right here. And you see how we have these push-ups, pull back, push up, pull back. But this right here would be like the 2019 push up and then crash. Now, this might not look like a lot, but let's go ahead and look on the chart what this was a 160% gain with a 25% drop. So that's pretty significant. It may not look small when you have it zoomed out like this, but then we also have this move right here, which was a 300% gain, roughly 285%, with a 45, nearly 50% drop coming off of this. And we're going to discount this right here because this is a global economic shutdown, March 2020. We all know what that was. So this was a little bit of an outlier, but it's healthy because even if we didn't have this likely would have pushed up, got another pullback, and then continued on. So what we want to look at right here, I'm going to delete. There we go. What we're looking at right here, the halvings going, and we've talked about this a lot on this channel. We are going to put that up there. We're looking at where is about, let's do like April 9th, option V. This is about where the halving is going to be. What I think is very likely to happen is that we do get this bullish impulse right here with maybe some trouble where we're at, but a continuation up here, up to this level, a rejection back down, maybe an attempt higher up to this level here. This is also the golden pocket right here from this move all the way to the top, all the way to the bottom. And again, the golden pocket is the Fibonacci sequence, the golden ratio 0.618, which is essentially 61.8% of the move. So if we break down all the way to here, golden pockets are very likely retrace levels in terms of where price action goes to. So this would be moving back up 61.8%. To put this into better context, think about holding a tennis ball and having your arm, straight out in front of you. And when your arm is straight out in front of you like this, and you drop the ball, and you do it 10 times in a row without adding any force, the ball is going to rebound and come up. Depending on how new or how bouncy that particular ball is, it's going to bounce up to roughly the same height every time you drop it without any other forces applied. This is the same thing that happens with price. The market goes into a downtrend. And then there's relief that comes in, and buyers come into it, and then this could be, you get up to that 61.8% level. And if this was only a relief rally and a smaller interim bull market rather than a full macro bull market, then you will have bears come in, take profits at this golden retrace level, and then bring the price back down from that profit taking. Now, I will tell you, even if we see bullish continuation past this, I guarantee you when price action gets to this level, this golden retrace, this golden resistance here, there will be some pause in price action that either goes sideways, gets a little bit of a rejection. There's going to be something that happens around this level here. So what we're looking at in 2023, I believe, will be something where we have this price action, kind of comes up, we get rejected, everybody's scared, and may come back to the 25 to test that. I hate my magic mouse sometimes. It makes my screen move. So come up, get a little retrace, scare people, and then come up to this level, and then break all the way back down to, somewhere in the 21 to 20 to 25 range. And then start our sort of parabola like this up to, whatever it's going to be. Let's hope it's going to be above 100K this time, but I'm not going to give some target. If you do want to find a target, an easy way to do it is look at the 1.618, the 2.618, and the 3.618. So you can go like this, option F, click at the top of this chart, drag it all the way down to the bottom, pull this across. Now I have this lined up right on this. Now we can come up like this, and we can see what these levels are. The 1.618 is 101,000. The 2.618 is 154,000. The 3.618 is the 208,000. Now, the reason you do that is because even if you look right here, option F, if we drag this back down, let's look at where this, I'm actually going to drag this over so you can see it. So we got all the way to the 3.618, as you can see right here. This is 60, we got above it. This was a 63,000. This is how people sort of give some estimation. It doesn't mean we think it's going to go there, but when you look at past price action, and also the fact that the 2020, 2022 bull runs were a little truncated by everything happening in the world and the economy and inflation and supply chain and China banning miners and, banning miners, turning off hash power, which caused a lot of downward pressure, which is this level, which was this right here, which then you had the Celsius collapse, and then you had it just cascaded all of 2022. So what we can do right now is when we're trying to estimate what's going to happen is I want to look to this chart right here. Let me come over to my saved layouts. We're going to go to totals. And this is what the thumbnail was about. This is what the this is a topic I wanted to cover today. We need to look at the Bitcoin dominance because as it stands right now, this is a classic cup and handle. This is where you have a cup and handle is when you have this cup shape here, rounded cup, and then you have a pullback here, which only goes, it doesn't go more than 50%. It doesn't go, it goes somewhere between the golden retrace and the 50% mark, which this has not broken that trend, so it's still above the 382. And then what you do to take the measurement on this breakout, now this isn't going to give us a price level. This is looking at, what is it looking at? You have to look at every piece of data on the chart before you try to make an estimation. This is the Bitcoin dominance. This is out of everything in crypto, everything that's available out there that's in the crypto ecosystem. Bitcoin, the value of Bitcoin and all the liquidity in Bitcoin makes up 44.32% of the entire total crypto market cap of every crypto out there. So that shows you how dominant crypto is. So what we want to do here, and the reason this is important, who cares about these percentages? Well, I do, because I want to make smart trade decisions and I want to allocate my portfolio correctly. And if the dominance in Bitcoin is going up as opposed to the rest of the markets, then that means that there's more liquidity pouring into Bitcoin or more liquidity pouring out of the altcoin market. So the only way this goes up is if either both markets go up at the same time and Bitcoin as a whole is going up at a faster pace than altcoins, or they both drop at the same time and Bitcoin drops a lot less than altcoins do. That will drive up the dominance. And the other option is Bitcoin starts to run and makes that first run, liquidity pouring into it. We just heard about, Hong Kong and China. They're going to be wondering where the liquidity is going. If it pours more prominently, especially from institutions and smart money and big money into Bitcoin, then you're going to see the dominance go up because that money's going into Bitcoin and not at the same pace. The same amount of money at the same pace is not going into altcoins. And so this is okay. This is cyclical. This happens. Bitcoin will pump. And then after Bitcoin pumps, it cools off. People take some profits. People reallocate to altcoins, and then altcoins pump. And so you'll see, that's why you see, looking at this, if I come out on let's go on the 3-day, that's why we see look at this. Look at the pump in dominance, fall in dominance, pump in dominance, fall in dominance, pump in dominance, fall in dominance. So right now, we have established a little bit of an uptrend that has gone, at a sharper angle. We did find support. And so what we want to know right now is this dominance going to continue to the upside? Well, looking just at the daily chart, the fact of the matter is we have a bullish pattern here. This is a bullish continuation pattern, which is this cup and handle. And the way to measure where this pattern will break out to is we draw a neckline here, which is a support from this high point and this high point. And we take another trend line. Easy way to do that, as you see me doing on my screen, you just press Option T or Alt T if you're on PC, and you get a trend line without having to come over here on the left bar, and you draw it from the neckline to the lowest point on this cup, and then you take this over to about where the handle breaks out. You can do it from the neckline. I like to be a little more conservative and do it from the place the handle breaks out. That way I'm not setting my targets above if I were to, you're not trading dominance, but if you're doing this on a price action chart, this way you have your target a little bit lower. But this is suggesting that if this were to break out to the upside, that we're going to get a 3.4% pump in dominance. Now, this may not seem like a huge deal. Well, a 3.4% difference on, a $1 trillion industry is a major amount of liquidity. So looking at this, thinking that it's looking like we had support, we rolled over, we had support. Now we have a bullish continuation pattern, this cup and handle. So now let's go ahead and look over at let's look at total market cap excluding Bitcoin. Well, in this case, we have a similar sort of setup, but there are some key differences here. We're going to let's go to the 12 hours so we get a little more clarity. The key differences here, this is a low and then a lower low. This isn't as round, even on the daily. This isn't as round. And in addition to that, we're getting, if we look just right here this isn't enough time frame, but we're getting a bit of a broadening sort of wedge, which can be inherently quite bearish. We're not getting that sort of cup and handle pattern. If we come down to the 4 hour, we can see that we kind of had the ugliest version of it you could ever have with this wonkiness. So I wouldn't even consider this. But what I am seeing with this chart is that this is looking like you had a breakdown. It's pushing up, but we're rolling. Now we're getting lower highs. This is looking like it's trying to roll over back to the downside. And why does this matter? This is looking at the total market cap of all the altcoins, Ethereum and every other coin in the industry. So we're seeing inherently some bearishness on this while we're seeing some bullishness on the dominance of Bitcoin. And if we think about how that plays out into charts, then that means that that doesn't mean every altcoin is going to be squashed. It doesn't mean everything's going to suffer. But there could be some plays that, you know, have multi-100% gains, but those are going to be outliers. When we're looking at the general sort of understanding of what's happening in markets, we want to understand where liquidity is going so we can capitalize on that, whether that's new addresses, whether that's more throughput, more transactions, more volume on whatever assets. And in this case, we're getting a general view on the entire altcoin class in the ecosystem. Now, we can also, this also includes Ethereum. We can also look at this without Ethereum and just look at, this is all the altcoins, every coin in the market excluding Bitcoin and Ethereum. We can see this right here. We're looking at the daily. Now this is looking a little more, this is looking bullish on a larger time frame, but the fact that we are still below this low, we are having this sort of broadening wedge. It's a very quick one because it's only 1, 2, 3, 4, 5 days. Option T, we kind of get this like that. So we're seeing some bearishness on just altcoins in general. But with that being said, where do we put our money? How do we make sure that we're in the best position? Well, first thing that we need to discuss, and we have to, I'm going to remind you of this very regularly on this channel, is that we have to remember to always check in with ourselves and ask, what's your time horizon? Are you trying to make something, like where you're actually trying to day trade or scalp trade and make a lot of money? Well, then the dominant stuff doesn't particularly matter in terms of the coins you pick. The chart setups and the formations that you're seeing and stuff that's about to break out, that's going to be more relevant. However, you also need to pay attention to the fact that the dominance, the knowledge of the dominance of Bitcoin going up while altcoins is going down may indicate that there will be a potential shorting opportunities as compared to long opportunities, just in terms of the general framework of the altcoin market in the next small period of time. The hope would be, and this is a hope, and we can't trade just on hope. The hope would be that we see the altcoin, where's that chart? To see the Bitcoin, to see this stay flat. I thought I just saw a breakout. I forgot I had a trend line on there. Is to see this sort of stay a bit flat or get rejected here and let altcoins run. I know there's a lot of people out there. I mean, I want Bitcoin to run as well. But the thing with Bitcoin is Bitcoin has, I don't want to say such a trusted sort of awareness about it. It is known as like the most blue chip sort of coin within crypto. Within crypto. Sometimes the chat distracts me because I see stuff flying by. And so there's going to be liquidity that comes into Bitcoin. When we see if we see altcoins run and pull Bitcoin along, that is excellent. I think there's a lot. The reason I say that is there's a lot of people I talk to that are deep believers in crypto and in the markets and everything that has to do with blockchain, and they hold zero Bitcoin, which is surprising. But there's an acknowledgement of the desire. We have to know this within ourselves. There's an acknowledgement within the desire that we want to catch up to people that have made a lot of money before us. And we see how they did it. They got in early on Bitcoin, or they got in early on Ethereum or something. And so we're trying to, get these, variety of, mid cap and smaller cap altcoins so we can get those 1000x gains. Well, I want to say to that, it's a noble idea, but it may not serve you as well as planned. The goal with your portfolio should be to have 1 or 2 major cap coins, meaning Bitcoin and Ethereum. Think of this as a pie chart. And if you're very conservative, have at minimum of 50% in Bitcoin. If you're less conservative, you can split that 25-25 or 30-30 Bitcoin and Ethereum, and then you can take smaller pieces of the pie with mid cap coins, and then your small cap coins, you have very small portions of your portfolio. Meaning you have, let's say you have 30%, 30%, 30% Bitcoin, Ethereum, Cardano, and then you have 15% Algorand and 10% Cosmos, and then you divide the rest, with the smaller cap coins with, the Graph or Singularity Net or whatever coins. And I'm not saying that this is a portfolio you should have, but I'm saying this is how you have to think about how you're organizing what you're doing. And not just be greedy and try to get, massive gains. You need to protect your gains by allowing yourself to set up a portfolio that is supportive of conservative sort of nature as well as an aggressive stance. So that way, if you are involved with, for instance, Crypto Banter, I love his show, but I don't want to say but. I love his show, and I felt so sorry when the Luna thing happened because he lost, I don't even know. It was tens of millions of dollars, if not more than that. And it was because he believed so much in that project that when it went down, he couldn't get out of it. He basically lost that money. So when you do organize your portfolio, you want to make sure that you do have some sort of safe split. And maybe it's a split between crypto and traditional investments, whatever it is. If it's just crypto, though, making sure that you have, your 20 or 30%, in Bitcoin, and then similarly in Ethereum or Cardano, whatever other layer ones that you want, Cardano, AVAX, and the smaller the market cap, the smaller percentage of your portfolio it is. And this, and I'm just gonna reemphasize this here. Is all you need to do to figure this out is come to CoinMarketCap, look at this listing of coins here, and this is in order of how big their market caps are. So if you're something way down here, past 100, something that's like, 780, that should be probably less than 1% of your portfolio because it has the least likelihood of sticking around. And in addition to that, not only does it have the least likelihood of sticking around, if something that's, 1,000 down on CoinMarketCap rankings, if that does get 1,000x on its own, it will end up becoming 30, 40, 50% of your profile just because it's ballooned over time. But with that caveat, I will say, as these things do start having major gains, if you have, a bunch of very, very small allocations in your portfolio, with the micro caps, if you were to do that, then you need to make sure as these things pump, you don't just feel rich for a week and then frustrated for life because you had, I've read so many stories where people had, $7 million in Dogecoin or Shiba Inu or whatever coin they were trading. And then the market, reversed on them and they didn't take profits along the way. You have to take profits along the way. Otherwise all your gains are theoretical. So you need to come up with a strategy to do that. And I'm here to help you do that. But let's go ahead and shout out Alex Green. I'll see you later, my brother. Let's go ahead and look at Cardano, because the reason we're going to look at that one is, as I mentioned, and if you're not yet, come over here to BitLab Academy, sign up for the newsletter. Within the newsletter I send out each week, you get the opportunity also to vote on different coins and different projects and different content that is here on the BitLab daily stream, as well as in the newsletter. And not only that, you also get entered to win a free month access to the courses and the indicator. So come sign up, bitlabacademy.com. And in that, the newsletter I just put out, you all voted on HBAR was the second to top. ADA was actually the top voted one. So we're going to do, actually we can look right here. We're going to look at ADA now and see, we're going to do some, we are going to do, where's it at? We are going to do some TA together. Here we are. So I'm going to do auto, I'm gonna double click on the chart. We'll do 3-day. Okay, so what I'm going to do is I'm going to clear this chart, remove drawings. Okay, we're going to do this from scratch. All right. I don't use this toolbar very much to draw, so follow along with me here. If this is your first time, I use quick keys on TradingView, and it might frustrate you at first, but then you're going to thank me later. So we're going to draw just some major levels here first, and to do that, we use Option J, or if you're on PC, anytime I say Option, if you're on PC, just think Alt. So Option J gives us a horizontal trend line. We're doing this right here. We're going to do another one right here. Basically, these major tops. Another one right here. And I'm going to try and do this one a little bit cleaner today. We've got a bit of a region right in here. So we're going to draw a box. If you want this box with all your tools that you like right here on the bottom, as I have mine, all you need to do is go on this and put stars. And then down here, no, how do I do? Here we are. Then down here on the star right here, you turn this on and off. This is what brings up all the ones that you starred here, as you can see, the ones I like to use. And so let's go back to my face. And so what we're going to do is we're going to pull up this little region right here. We're going to make it a little bit smaller. We're going to go kind of like that. And so we've broken through this level. We're going to do one more line here, Option J. Now, what we can do is we can do a major fib, but we don't need to do that. We understand that we are in a downtrend. Option T gives us a trend line. Option T, we broke through that trend line, of course. Everybody's aware of that. So we've broken through this trend line. Now we're going to tighten it up. Tighten up now. All right. So, of course, we also had the descending wedge. So let's go ahead and figure out where this was. Yeah, it's just like that. Okay. We're just doing this so we have a good map of what's happening on the chart. Now, the major fib I'm going to do is going to be from this level here and from this level here. So first one we're going to do is Option F, gives us a fib. Alt F if you're on PC. And so what we can see here is that we've got a little bit of work to do. We've got a line right here, right above us too, Option J. There we go. Now we're going to zoom in on the 8-hour chart. Okay, now we have a clearer picture of what some of our levels are. These two that are close together, this is the golden pocket, that 0.618 level we're looking for. Now, as you can see, we've got this level just above us that Cardano is fighting to get to. Fighting to get here. It's not control. Somebody says it's control. No, it's Alt. If you're on PC, sorry, if you're on Mac, it's the Option button, which is next to Command. Option gives you all the quick keys. And if you are wondering, you can come up here, click on your name, and then zoom down to keyboard shortcuts, pull this up, and then go to chart. And then it tells you exactly what a bunch of the different quick keys are for the different stuff on here. So that's a quick way you can find it as well. So what we want to look for here is we see that Cardano is sort of rounding over here, and we can tell this because the momentum it's not going at a sustained angle. We're seeing this round over, which is a bit of a bearish sort of structure. Excuse me, I need some water. Seeing this bearish structure, but we got this reversal pattern right within this, which is basically showing that the bears tried and the bull said, hell no, we're coming back up. So what we can see, man, something tickle in my throat today. We can see that we're battling the zone, which is, I think this is a 382 fib right here, as well as the golden pocket right here, which has a lot of price interactivity. So I'm looking for, as soon as we break through this level, the only other thing I want to do on this is come back over here and go to the volume range visual profile. Now we're going to double click on this. I hate the paintbrush. Okay, double click on this. Now, yeah. There we are. Go to 200, give us a lot more resolution. Karen, yeah, we're going to have, we have over 30, almost 30 different courses that are coming to BitLab Academy. We're going to start with about, I don't know, there's probably going to be about 70 or 80 new lessons that come on the first update. And then we're going to be updating new lessons throughout the next, I mean, basically indefinitely throughout the next 2 years. You know, so there's going to be new stuff coming on a regular basis. We already have a ton of it filmed, but we have to release it in batches so we don't, you know, so we're not waiting on the editors to edit 200 different videos. We'd be waiting until middle of the summer if we wanted to launch soon. So we're releasing it in batches, but there's a huge amount of content. That's all brand new content coming to BitLab Academy here. And the plan is by my birthday, which is in March. So we are seeing here that we have this volume range here. I'm looking at the 8 hour. We have this big shelf right above us. This is a point of control, this line that's coming out of this, which is the highest amount of volume traded, meaning volume. This is volume traded at, you can see each bar is representative of the price level that it's next to. So there's not much price, there's not much volume that has been traded at this price. And we can see that because there's on this visual range, we only see a couple candle bars. Whereas right here, where we see a lot of candle bars, a lot of volume has traded at these levels. And we have this basically roof right over our head, and this changes because this metric is based only on what you're seeing on the chart. So if I look at everything, it's going to give me a range of everything. So it's called the volume profile of the visual range. So we can see we have a lot of choppiness. We have this shelf also on the smaller time frame, looking that we have volume directly above us, which is right at the 45 cent level. Which, man, I'm going to be excited when Cardano starts breaking above the 50 cents, especially once we break above 60 cents, which is this level here, because then the next stop from here very likely would be somewhere near this 1.618, which is also previous price action. So what I'm seeing here in the likelihood, we got to pull up some indicators. Okay, we got to zoom out or zoom in so we can see. Now look at this. So prices pushing back. See how far down price push, and you see the extrema just barely pushed out. So this was almost a somewhat healthy move, because even with this move to the downside, the extrema, which is this here, is within this shaded area. The shaded area is the healthy behavior area. Anytime these bars stick either opposite side or out beyond where the shaded area is, that means it's a bit of an overextended move and likely will cool off. It's almost like a self-divergence. So we can see this push down. We got a little bit of a move here, and look how much less from here to here. Look how much less this push down, and look how far outside of the extrema this is here. And we could see that. You see how far this is outside of the shaded area. So this is telling me that this move down by the bears is as much of an attempt as it is. It's a little bit overextending itself. However, we do have a bearish divergence on volume, as we can see with these red markings on the top of this volume measurement. This is all these indicators that I'm talking about are indicators that you get here at BitLab Academy. Just come over here to indicators, and you can get involved with these. It's the BitLab trading suite, and we can see that this bearish divergences, meaning lack of fuel for the price level. And if you have a lack of fuel for a price level to hold it up here, then the price action likely is going to come down. So although we do have this, these are two conflicting signals. So I'm kind of erring on the side of trying to find a point of let's see if we can find any sort of. So there is a bit of a point there, because we have 1, 2, 3 touches, and then in addition to that, 4. This was a little bit of a, it broke out and then came back in. Now we're finding support on this again. We want to watch Cardano. I'm here on the 8-hour chart. We want to watch Cardano for these levels. Option J. We want to look at, we're going to come down to the 2-hour. We want to see what's going to happen when if this is going to break out and continue to the downside. We're going to reduce those other indicators. We want to see, we don't even have market intelligence on. So here we are. This is the other indicator that's part of this package. We see we have RSI on balance volume. I'll put it in full so you can see. RSI on balance volume, as well as the hidden volume bullish divergence here, finding support at this trend line, in addition to having this blue zone here on the significant movement, shows us that this likely coming into a trend floor sort of area, a trend support. So if we do lose this level, and we have all these extremists out. If we do lose this level, I expect that very likely it could be another fake out like this, something that comes down. But we want to watch if this does break to the downside. We want to watch if this does come down. If we get rejected from this, we do not overtake this level again like we did here, then I will be looking for these lower levels. I will be looking for price level, around the 33 cents. Hopefully we don't get as low as that, 33 cents, but we can also come down here, option F, come to the top here. And we can, we can come all the way down to this 0.618, which is at 37 cents, 37.6 cents, and still sort of find support and come back to the upside. So that's kind of what I'm seeing right now on Cardano. I'm going to throw it back over to everybody in chat. How's everybody else feeling? How many of you are part of, how many of you are ADA holders? And if you are an ADA holder, when did you get in? I guess it's not a sad story, but I did, I had about 300,000. Actually, no, I apologize. I had like 600,000 or 700,000 Cardano, back when it was at 1 cent. And I felt like a god when I sold it at a 5x profit, when it got to like 4.5 to 5 cents. And then, it was a story of endurance for those that have held it all the way from the beginning, because Cardano can get quiet for many, many months on end, almost a year or 2 years. And it can really shake you out. It's a time-based shakeout when you do it in that sort of sense. And so you've got to be patient and have conviction for the assets that you want to hold long term. Because had I held on to those 600,000 or 700,000 Cardano all the way till when it hit $3, then that it would have been a different sort of profit level than 1 cent to 5 cents. But I'm definitely a believer in Cardano. I hold a significant portion of my portfolio. I have Cardano, so shout out to everybody else that's out there. Some people hate it, more power to you too. If you don't like Cardano, you have other assets that you love, then let me know what your favorite coin is outside of Bitcoin. Bitcoin should be everybody's favorite coin for being the daddy of all this entire ecosystem that we're in. But if it's not Bitcoin or Ethereum, let me know what, because some people have some pretty interesting coins that, it's nice to share with each other. Sometimes sharing, something you're looking at helps somebody else take note of it, and you may make them, the value of buying a house if they get in at the right time. So big shout out to everybody. If you are an ADA holder, I'm holding long, holding strong. They got some great updates that they're working on right now. So big shout out to Charles Hoskinson and the entire crew. And the other thing is, we think about all this news from China right now and Hong Kong. Remember, Cardano is developed large in part by IOHK, which is Input Output Hong Kong. So there very well could be some speculative sort of notions around not only Bitcoin, but Cardano potentially getting some of the good amount of that liquidity coming from Hong Kong as they've opened up, token, digital token and crypto sort of trading and all that sort of stuff. But big love to everybody. I got to go. I got to film a ton more content for BitLab Academy. I'm trying to film almost 30 videos before I leave Friday. So big love to you all. Again, my name's Kelly Kellam. Thank you. So that's where you can find me, at Kelly Kellam on Twitter. And of course, please hit that like button if you haven't yet. There's and subscribe. There's only like 60% of the people that watch this channel every day are not subscribed. So hit that subscribe button. It really does help. I appreciate you all. Hit that like button on your way out, and I will see you in tomorrow's video. Adios, muchachos. Thank you for coming. Thank you for being my friend. Adios, muchachos. Thank you for coming. I hope to see you again.